China's economy expanded by 5.2% last year, hitting the government's target. On the surface, the expansion is great, but economists are quite wary about the growth momentum moving forward amid the ongoing property crisis, downbeat consumer and business morale, and weak global growth. And join me now with his perspective on the Chinese economy is Head of Chinese Strategy at Prescient, Tian Pan. Thank you so much for your time, Tian. Now, markets were hammered yesterday after the release of that Chinese GDP data yesterday. Of course, markets were expecting growth of 5.3% in the fourth quarter. China posted 5.2% growth, but for the full year of 2023, there was growth of 5.2%, which surpassed the government's target of 5%. Do you think that this was an overreaction on the market's part?
Yeah, thank you for having me, Snati. I think definitely markets, as usual with China, has really high expectations. I think with a 5.2% GDP growth number, we missed consensus estimate by 0.1 percentage points.
Yeah.
So it was very close. It exceeded the government's target. Fundamentally, all economic data is looking good. The only downside is that quarter on quarter, we saw a slowing down of growth. It's growth nevertheless. So I think markets were not too happy about that and worried about growth trajectory losing momentum going forward. So, I mean, we do expect consensus estimates anything between 4 and 6% for 2024. Still good growth numbers, but just slightly poor relative to China's history. And I think that's probably what the market's worried about.
Well, I mean, let's maybe unpack that 5.2% growth that we did see in 2023, considering also the fact that a lot of analysts had not expected that kind of growth. They expected it to be less than the 5% target, but also considering the fact that there wasn't any bazooka-style stimulus that we saw last year.
Yeah, certainly. I think 5.2% exceeded a lot of people's expectations because we saw wide-ranging estimates, anything between 1 and north of 7% coming from different institutions who obviously have their own methodologies. Overall, we think the property sector was certainly a detractor. Domestic tourism, definitely a positive contributor. A lot of things were pretty much in line. The EV sector, for example, had massive growth. So we're seeing a lot of different components in the economy at play. And overall, we came out with a respectable, pretty good number by international standards in terms of GDP growth.
Yeah, you're talking about that property sector being a detractor. And I mean, we have seen things getting worse there on that front. Just a couple of weeks ago, we did see the Zongzi Enterprise Group filing for bankruptcy. At this point, does it look like there's any light at the end of the tunnel for the property sector? Is there anything that the government can do, or is it a case now of government trying to concentrate on diversifying economic growth away from that sector?
Yeah, I mean, you mentioned the term bazooka-style stimulus earlier, and the government has made it very clear that they are not going to do that, especially for the property sector. I mean, since 2018, the government has warned that the property sector is a risk. Since about 2020, the government has cut off a lot of sources of shadow bank funding for the sector because it's just overblown. And the more a bubble is funded with more debt, the harder the fall. So right now we are seeing a slow fall of the sector that's still manageable. It's going to cost, in our estimates, anything between 1 to 1.5% per annum on GDP growth for the foreseeable future. So right now we're probably still in the early stages. We don't have too much optimism in terms of the property sector really becoming what it was over the past 2 decades. But we do believe it is manageable.
I mean, just sticking to economic data, we did also get the export print, and we saw China's annual exports are falling for the first time since 2016. Is this a global growth issue? Could things get worse before they get better, since this is basically not of China's doing, really?
Yes, absolutely. You're right. I think we've been saying for 2 years now, Chinese export growth initially slow, and now we are seeing the first decline. I mean, we need to remember that China is a supplier of global consumers. And when global consumers do not consume, that's why exports drop. Obviously, it's been offset by a lot of increases in the EV sector that I mentioned, but the falls in other sectors of export have obviously brought the overall number down, and the global high inflationary environment and low demand environment is a major part of that.
Yeah. What was also quite interesting is that, after China decided to withhold reporting the youth unemployment figures, they did resume reporting that. How is that looking like at this point? Also, considering what we saw the last time China posted this data.
Yeah, so the previous youth unemployment, so it's defined as ages 16 to 24, was 21% before there was a pause in the publication. Latest number that came out, 14.9%, a big improvement from 21%, but still, it is still almost triple the national unemployment rate. So it shows that youth unemployment is still an issue in the country, even though there is a relative improvement. So there's something that the private sector needs to really help out in terms of employing these youngsters coming out of universities, and that will take some time, but this year, as the economy improves on the ground, we expect more employment and then obviously a drop in overall youth unemployment.
Well, thank you so much for giving us insight on the picture of what the Chinese economy looks like right now. Of course, we will be getting more insights from you as the year unfolds on the momentum of that economic growth. That was Tian Pan, head of Chinese strategy at Prescient.